Hi from Andrea Unger. Today I want to answer a question I received per email where I was asked why I don't apply my trading systems to cryptocurrencies, to Bitcoin, claiming that that would probably lead to higher profits. So why? Actually, this shows how strong the communication about Bitcoin has been, because it associates Bitcoin to high profits, which might be true, which not necessarily is. The point is that in my case, that it's absolutely not true. It's not true that if I apply my systems to Bitcoin, I would make more money. First of all, because my approach is always risk-based. This means that when I size a position, I start from looking at how much I could lose on that position. Considering Bitcoin, this is a very volatile market, pretty new, and it has very large moves, which obviously are an opportunity, because if there is a large move, you can make a lot of profit being on the right side. But considering these large moves, you have to consider how to exit your trades in case things go wrong. So either you use an ATR stop, which is a volatility-based stop based on the average range that the market trades through. And in this case, you understand immediately that something proportional to this is wide, large, because the market is moving very much, and your stop will be being proportional to the width of the moves, would be a large stop. In case you use a fixed stop, a fixed monetary stop, again, this needs to be large enough, because the tight stops are good only to be traded and to close your trades in tight losses, small losses. The truth, this is a urban legend that tight stops are the solution to all the trading problems. It comes probably from people who don't trade. Stops, monetary stops, have to adapt to the type of trades and to the type of markets. And in a very volatile markets, stop losses, if applied, need to be large enough to avoid being continuously stopped out, which is obviously something we don't want. So, considering this, and considering that I would use large stops, obviously my position would be small enough so that that large stop would not impact too heavily on my account. If I can gain twice as much, doubling my position, but also lose twice as much, obviously, and the twice as much in case of loss would be too much for my equity, I would not double my position. So again, I would not take the benefit of a highly volatile market. Now, let's now consider another obstacle I have. There is a technological obstacle. Technology on the cryptocurrencies today does not allow a full integration with an automated environment, such as the one I use. We could imagine to work on CFDs or on futures of Bitcoin. They are today available. So let's say we trade there. Okay, fine. Now I have to build a system on this, and I'm not able to. I'm not able to do something which I would be confident in trading. Why? Because the history of these markets is too short, and that short history has been too crazy, in my opinion, to represent the real identity of these markets. I don't believe it exists. I don't have the system, the magic box that you can apply everywhere, in every situation, and for some miracle it detects what to do and it prints money for us. No, I don't have that. I said I don't believe it exists. But my systems were born from an investigation on a specific market, a study on the market, trying to understand how that market moves, and then tailor-suiting something that works there. I'm not able to do this today on Bitcoin, because the information I have today is too short to depict a potentially complete scenario, and as said, too crazy to believe that that is what will be tomorrow. Under this scenario, I don't feel confident in trading these markets. I don't need it. I have all the commodities, the index futures, currency futures, bonds. I don't need today another market just because it's fashion to trade Bitcoin. I would be happy to make money on Bitcoin, but I could consider Bitcoin as an investment if I study those markets, just for the sake of studying the markets and considering as an asset allocation for the future, but not to trade it on a hit and go way as I do in some cases on other markets, because I don't think I have a model which I would be confident enough to put there and to put real money on. As said, I'm lucky I don't need it. I'm not pulled by all the promotion about Bitcoin, and it's fine. I mean, maybe tomorrow means in some time from today, I will have enough information on these markets to decide to build something that works on them. I don't do it today. I don't think it's wise to do it today. I don't think it's wise to trade, algo trade, Bitcoin and cryptocurrencies today. That's why I don't do it. I do trade all the other markets. That's it for today. Stay tuned, guys. Ciao from Andrea Unger. Enjoyed it? Click the link below and you will be noticed as soon as new material is available.